Hey traders, Parker here. I don't have another indicator for you, but I have more so of a concept. And if you want to look at this EMA cloud situation as a indicator, you can. But more so, I wanted to get some feedback and ideas on this concept that I've come up with or been thinking about for a while. And it's along the lines of the HCL3 wave, but it's done so more so on the three move averages. And the three move averages that I've chosen for this 5 minute time period is the 12, the 48, and 96. The 12 gives you an hour, so 5 bars equals 60 minutes. 12 bars equals 60 minutes, and 48 bars give you 4 hours, and 96 bars give you 8 hours. So that's what we're seeing on the screen right here. This low one is 96, this middle one is the 48, and this top one is the 12 move average, closing price move average. And this midline right here is this OC, what is it, Heikin-Ashi close. So Heikin-Ashi is just the high, low, close, and the open divided by 4. And this is just the average for it. But as the move averages separate or condense together, this is what makes the momentum or the, I call it acceleration. So acceleration, momentum, whatever you want to call it. So when all the move averages are separating or pulling apart, you'll get cyan. When the fast paced one, which is the 12 and the 20 and the 20 and the 24 are moving apart, you get a blue one. And well, let me take that back. You will get blue when the fast and the mid move apart, while the mid and the low are going down or are actually condensing. So, but you got this cyan color right here, and I look at it as more so of acceleration to the upside. And here's the same principle, and the opposite is red. When the all three moving averages are condensing, so you get red. And when the fast-paced move average is actually separating or spreading apart, while the lower two move averages are actually still condensing, you will get this pink. And it's just an early warning sign that, hey, the fast pace, I'm going to say the slower time period, the faster pace move averages are actually moving up or separating, while the slower move averages, the mid and the, are actually still condensing. So, and this would be, I would look at this cyan right here at this top, this peak, whatever, as a climax, and it's time for it to come down. Same situation here, and volume also tells you a tale as well. So I'm going to make this, I'm going to only do one. Let's see, slipping my mind. So let me maximize this sale. So volume also tells you a tale as well. So if you remember when I told you before about my volume, this right here is the buy sell volume indicator, and it gives you the averages of buying and selling. So you get yellow for ultra high selling. You get red, this color right here, for higher than average selling. You will get this dry red for below average red selling. And there's no orange in that part, but it's there. It's just not showing up. But here you will get this green for above average. You get this light green, higher than average volume on buying. This is just slightly above average, and you will get white for extremely above ultra high volume, and you get this dark green color below average volume. So those are the 4 colors for the buying, and the 4 colors for the selling as well. So when we look at this situation right here on the 5 minute, you can see right here where the two for the, I'm gonna say the mid range or the high, and the fast moving move average and the mid move average actually turn bearish, Why the lower move average and the mid move average were still bullish. But as you can see, it looks more so when you look at the midline, you can see all this confusion because it's switching from red to cyan to pink to cyan to pink. So there's a confusion because the cyan and pink, cyan is showing that all three move averages are actually separating, and there's momentum to the high side. But then you immediately switch to the pink, showing that the mid and the lower are actually separating, while the higher and mid are actually condensing. So, and you get this back and forth. So for me, this is not a clear area to move into. And one, you hitting into this area of supply or demand, whichever one it is. I can't remember, but let's take it back. So you actually enter in this area of demand, but you got this spring back with the 50% retracement. So there's this whole entire area is just an area of confusion. You're waiting for actual confirmation, but you can play it with using these three move averages. If you want to say it's bullish on the hour, it's bullish on the 4 hour, it's bullish on the 8 hour as well. So I chose those three move averages to help me get a better idea of what's going on in the stock. And you can see this is Friday's price action, and you're getting this whole trickle down, and you see this red, it's red all the way through because you get this acceleration to the downside. And then you get this pink warning sign, hey, it's some upward momentum in this area where this move has been exhausted in a sense. And then you get this extreme uptrend with this big bullish buying candle right here. And you get a pullback to this mid or the open, high, low, close divided by 4, which is the Heikin-Ashi close. You get a pullback to price average here, and you get another uptrend as well. So I'm not familiar with this white line, but it's probably on the daily. So we can actually just go to the daily and see why I put that white line right there. And I probably put that white line there because of this line right here, this low right here. And I was looking for the close. Well, I was actually looking for price to retest this low right here, or more so because it dropped below it. This low right here would act as resistance. And if we wanted to, it's still too fresh to actually do what I'm about to do. But you can actually draw a box from this low to the highest, minimum of the next candle. So we can actually draw this. Yeah, that's when it made it. So I'm going to draw from that candle right here. And I'm going to mark out as red. And this is just the supply and demand zones. But it's way too early. You need more candles or more so to actually for confirmation for this right here. It would have represented here as a demand zone. But because price moved down below it, it's now a resistance in my book anyway. Other people might say otherwise, but I follow the house rule of price moving above an area of resistance. That resistance area becomes support. And when price moves below an area of support, that support now becomes resistance. So I'm going to make that dark red. And we can actually go back to it by switching over here. And that's exactly what happened. Once price rebounded over here, came back out of that area. Remember, this was demand. Now it becomes supply because price moved below it. So now it's just stuck in this area right here of moving into this area of supply over and over again, and still testing it, and it's still selling off. And that's where this white line came in, but that's not what I came to talk about. I came to talk about this indicator right here. And when we look at it on a daily aspect, I chose 5, 21, and 63. And I actually need to up that 63 to something higher than that, because when you look at it like that, 5 represents a week, 21 represents a month, and I want to look at it on the quarterly aspect So 21 times 4 will give me 84. And that'll give me my quarters. And this volume, don't worry about that. That's not going to do anything. But that's not going to do anything. It was something I was working with, but it's not doing anything. And this is the S&P 500. I want to go back to when the whole pandemic started. And you have your fast and your mid move average, exponential move averages that has moved up, and saying that, hey, the trend, I guess the mid of the trend has changed to, I'm gonna say this faster period of trend has changed over to a bullish. But it has been confirmed because it's still underwater in my book, this red area right here. And it finally broke above that area, and it's been trending up ever since then. So, but you can look right here as it turned pink to red, because you had this slow move where price tried to fight back and it got crushed. And you got an acceleration move down. And then you have this area of confusion right here where where the three move averages were colliding with price, holding it down. The price finally moved into, and you got this big acceleration move right here. So the other reason why I chose these numbers right here was because there's only 253 trading days in a year. So we break it down, to 12 months. So 253 divided by 12 gives you 21.08. So then that's roughly 1 month. If you subtract the number of weekends in a month, you get 20 days. And then you have holidays in there as well. So, but 21 gives you a pretty good basis for how many days actual trading days within a month. And that's how I came up with that figure. And then I took that figure and I times it by 1/4 roughly, and you get 5.27. And that's roughly a week. So those are my move averages. And like I said before, I chose 21 times 4, which gave me 84. And that gives me my quarters. Or actually, yeah, the 4 months. So that represents 4-month time period. And that's why I chose these move averages on the daily. And like I said, this is not necessarily an indicator I'm trying to share or sell or do anything with. It's just something I'm working with, and it's a concept that I wanted to get some feedback from you all about on. And if you think this would be helpful, or you had a different idea, a different concept as well, I wanted some feedback. So we'll switch it to the Triple M. And I wanted to try this as well. 3. The reason why I switched it to the Triple M or 3M, it's because I don't put anything on 3M necessarily. And it's usually a clean chart that I haven't done anything with. So if you remember how I explained to you before about the programmatic support and resistance, that's basically what I'm about to do. So I'm going to do 5, 21, and 84. And I have it set on a 3-year time period. So I'm going to get rid of this whole area of possible supply demand. And this is what we're left with right here when I do that. And like I said before, the cyan represents 5 days. The pink represents 5 days as well. The orange or this light red represents a month. And the light green represents a month, or 21 days, and this dark red represents 84, and this dark green represents 84. So let's switch it back to the SPY and see what we're looking at, and I'll go to Tesla from here. So we come back to the same area when the pandemic hit, and you can see what the price is doing. It's making new lows, higher lows, I should say, higher low, higher low, higher low. Even though you got this lower low, you got this push up as well, and then you got acceleration from the indicator as well. So also you got these higher highs that are being formulated as well. So, and this is pretty much what my idea or concept about using these move averages rather than using a traditional 821, the 50, the 100, the 200. Using any of that stuff right there, I don't want to use any of that stuff. I kind of more want to look at the actual year or how many trading days are actually within a year, and I'll just go ahead and pull it up real quick. Give me one moment. And this is what comes up. It says 252. Well, technically 252, but it's actually 253 when I Googled it. This is, what is it? So I guess I can look at it like this. So 2020 had 253, 2021 had 252, and this year 2022 has 52. So I guess it fluctuates or fluctuates between one day. So for me, that's negligible. So I'm not gonna pay too much attention to that. I'm gonna focus on my 5, 21, and 84. And when we look at the SPY, you can actually see. So this quarterly, it became bullish on this quarterly or the 84 right here. The 21, the monthly moved above the 21. And while the 5, the weekly, was already above the 21 and the 84. So we're looking right here with SPY. This is the same area that I had created earlier. And when we actually look at the actual indicator for the weekly, you don't have another weekly swing low has not been put in yet. But Monday, I'm pretty sure when the market opens up, one of these bars are going to be a swing low. So let's go to Tesla and check it out on there. I was actually in Tesla for this run up in December. I forgot how much I made on it. But I didn't have this concept or this methodology to really call from as well. So this is where a big push came up and a big slowdown as well. This is 84. Swing high, swing low, or the quarterly swing high, swing low. Quarterly, weekly, and then quarterly, monthly, and weekly. But you had this huge try and huge wick right here. This is crazy. But this would be considered a weekly, and it couldn't really press up against it or press above it. Trapped in that area. But we're gonna look at Tesla regarding these same move average numbers that I chose as well, with the midline being this acceleration. And you can see how I made these double bottom right here, and then higher low, higher low, higher low, higher low, and all these higher lows pushing up into the accelerated move up to here where I had its climax at 1243. And then from there, lower high, higher high. But from there, it's just lower highs. And you can really thank the coming into the new year and the economic impact that the pandemic, the war in Russia, and the Fed raising rates really just destroyed it and brought it all the way down to here. I think this is the day that Russia invaded, or possibly this day right here. But Tesla made this smooth move on this upswing. And you can see where it hit all this confusion on this week, on what I'm considering the weekly, the monthly and this quarterly, and it finally broke above it on this one right here when the weekly crossed above the monthly here, and then the monthly crossed above the monthly crossed above the quarterly here. So right now it's actually at this pullback area, but quarterly wise, it's still considered bullish, and the weekly is not crossed above below the monthly. So I'm looking at Tesla, and I'm thinking it can still rise up. Those pink lines, if you can look at the beginning of them, that represents that gap that Tesla is sitting in. And we can move back here to Tesla as well, and you can see where it's just sitting here in this gap, or it's bouncing off the gap, bottom of the gap. So you can actually really consider this gap being filled. And I'm gonna do the same thing I did on the higher time frame, and I add this to it, and we're on the 5 minute. So 5, 12, 48, 96. And this is what we get on those three, on our swing high and swing lows for those three different, for the 5 period move average, but for the actual look back periods, be 12, 48, 96, and this is what we get. And you can see this is the same low from the previous day, which Tesla retested. It came down, we were actually right to the gap, and it paused, and then it made its move down, came back up, and it tried to regain this area right here, but it couldn't, have made another swing high. But the EMAs actually showed you everything. Even though it was bullish over here, it was short-term bullish, and the volume showed you that as well, because you had this huge area. If you remember from my volume analysis video, it's an irregular body. It's a small body between the close and open, with this huge amount of volume on it, and it's telling you a pullback is about to happen because the sellers actually overtook buyers in this area, and it's yellow, so it's ultra high volume at that. And it moved down from there, and then you got your acceleration to the downside. You had this brief pause, acceleration to the downside, and then you had this upswing with this, and you actually do have a swing low down here. And it's a shaved bottom, so which is very bullish. And you had this acceleration to the upside, this pause, another area high volume, and ultra high volume, which is white candle, and acceleration to the upside. And this is Friday's price action. So you can see right here where everything turned around. And like I told you before, I chose these numbers because divisible by 60 or whatever, and you get 12 times 5 is 60. 48, it give you 4 hours. 96, it give you 8 hours. So let's see. What else I have to say about this indicator? That's really everything that I had to say about this indicator, or these move averages that I've been playing with, to get a better accurate idea of what's going on in each time period. But I have seen where people have just created boxes with labels where it actually shows the what's going on in those time periods, but they're according to move averages as well. I should have already had this done, but I was trying to bring up one of those boxes. Yeah, it's not one either. It might be this right here. Yeah, there you go. And this was some people have done with, I don't remember MW. I know this is 4 day, 3 day, 2 day, 1 day, 4 hour, 2 hour, 1 hour, 30 minute, 15, 10, and 5 minute. But they're all relying on the 1021. Each one of those move averages are based. Each one of these are based off 1021, and that's what most traders will look at is 821. And that's what I'm not doing. But that doesn't mean anything for me, because if I'm on a 5 minute time frame and each candle represents 5 minutes, so 5 times 8, that's gonna give you 40. So 8 of those candles, or 8 period move average, gives you 40 minutes of data. And that's what I was trying to do with here is 12 candles gives you 60 minutes. So it takes 12 candles to give me 60 minutes. So if I put the move average at 12, or exponential move average of 12 on there, I'm going to get an hour worth of data. And I really didn't mean for this video to be this long, but I wanted to clearly get my thoughts out and clearly communicate to you all what the idea and concept of this indicator is. Or like I said, you can get your own move averages and put them on there as well and do the same thing. And this is just what I've been looking at and just what I've been working with. And like I said before, this is just your programmatic support and resistance indicator. And I did that in my last video, I believe, where I tag where you can get this from on the Use ThinkScript community website. And like I said before, you can create your own indicator or create your own 3 move averages recorded, whatever time that you're looking at. And this is just my idea of basing my move averages on time versus just what every other trader's been using with the 8, 12, 200, all that other stuff. And getting a better, clearer concept or breakdown of what I'm actually looking at. So one of the other stocks, AMC, a lot of people darling favorite or whatever. And this is AMC's move up. And I guess I'll do GameStop after this as well. And you can see right here where it really just tunneled up. I'm calling it tunnel up, or accelerated up out of this area. And I was in AMC. It actually went up to 25 that day. I think I was in at $10. I think I put like $2,000 at $10 and got out of it. I don't know where I got out of it, but yeah, it went up to 25 on that day. And you can see how with the programmatic support and resistance, it came back to this area of support, and that was a long-term area of resistance that came from this area, that candle right there. And it swung down below it, created support, and swung back above it, and actually just crushed it going back up. And I know I re-entered this trade at 30. So yeah, I re-entered the trade at 30, and I don't remember where I got out at. So And this is GameStop's move. And Roaring Kitty, and he probably got in down here. I forgot what his average was. But this is GameStop's whole entire move according to those 3 move averages that I put on the screen. You had this dip right here and it moved right down to that 90. What is this? The 84 move average. Dipped right down there. Swung right back above and went back up. I remember watching him do this as well. Benzinga had a watch party for that. And we coming over to now. It had this big move right here on 318. Moved up. Kept moving up on high volume. And right now it's retesting this area, this mid-level right here. Of this 21. So the monthly. It's retesting the monthly. And this right here is the quarterly. And this right here is the weekly. And right now you got blue showing that these two are moving down. This the weekly is moving down against the mid monthly, while the monthly is moving away from the quarterly to push it up. So we'll see what happens Monday. And if nothing else, you have this support here at 133. And what else? AMD is one of the ones I've been looking at as well. That big move up became bearish right here. And right now it's still bearish. And really hasn't been able to reclaim it. Even though it moved up short term, the weekly above the monthly, it couldn't stay there because the quarterly and the monthly was still low. It was still bearish the whole time. And you getting these spring ups, but you getting this knock right back down. It was another one that I wanted to check out. We can actually just go to the daily because I actually played this one this day. Jumped in about, I want to say 101 something, rolled it up. You got this acceleration to the upside. Boom. And then you got this deceleration that came in with volume. This red, these high volume candles right here. And you got this ultra high volume right here. And this is really just stopping volume. Just stopping from going down even further. And this is just a mess over here. No direction. Couldn't decide where it was going to go. And then we have Friday's price action right here. And it had found these areas right here of support. And that's where it's been sitting at the whole time. And even when it came back down, retest and create these other areas of support. And this is green. So that'll be that 80, what was it? No, that 96 support. So hopefully Monday, this will be going back up, and actually this green area that I created down here, well, you can't really see it now. But anyway, on a daily, this is an area of demand, and that's what this thing is actually just dropping in. And you can see with that white line right there, it's a box, and it's just too dark for you really be able to see. But anyway, it's an area of demand. And you can see it dropped right here and it shot up. Drop right here and it shot up. Drop right here, and I'm hoping for another shot up as well with AMD. And that would probably be considered a triple bottom. 1, 2, double, 3. Triple bottom of an area of demand. Another tech one, NVIDIA. I haven't looked at this one, but I already drew this area of demand down here and it's actually in this area demand that I drew from over here, which was resistance but became demand. It's becoming demand now. So hopefully Nvidia holds up in this area, but it's gonna have to retest this area as well, which was support, but it broke below it, and now it's gonna be considered resistance. Same situation here, and it couldn't really conquer this area of resistance, but it did conquer this area of resistance. It had some trouble over here, but you had this huge red candle take all that out. But according to these three move averages, it's still slightly bullish for the long run with the monthly over the quarterly, but you do have a weekly below the monthly, and right now you have this acceleration down. So we'll see Monday, and we'll look at it let's say Friday or Saturday, and see what this stock actually did. But this will be the end of the video, and that's just the concept that I've been thinking about and working on. So if you found this helpful, leave me some feedback and comments. I really would appreciate it. Or if you had some different ideas or different ways of going about things that are non-traditional, that'll help you out and help you make money, please share and please share and give feedback. And if you don't mind liking it, and if you haven't subscribed, please subscribe and do so. I appreciate you guys' time, and I never want to waste it, but I just wanted to give you a new idea, a new concept. Have a great day, and wish you happy trading.